Hello everybody, this is Jim Hiles, First Capital. You're going to be looking at your first snapshot. So I'm going to do my best to explain it to you in a few minutes. So you're going to get page one, which is going to have your information right here, which be aware that there is a date in here which tells you when the report is to and from. And notice this is from February 1st to 4/25 of 16, yesterday's date. This is the actual audited and scrubbed information we have so far. We will be getting past information to you shortly. So moving on to the next page, you're going to see a page which has a number of different key points in it. So number one, we're going to be looking at your objectives, basically one of 5 categories. Your target rate of return based on the objectives that we have, with looking at our capital market assumptions that we've gathered from historical data. We also are going to be looking specifically at your time horizon, and essentially this is the point we're going to begin to draw down into the funds on a significant basis. Then we're going to come up with what should be a target stock bond allocation based on your risk profile. And you can see in here that that's directly related to your risk tolerance, which was done on a scale that we did some time ago, and it's always a good idea to review your risk profile because it does drive the investment objectives. Then based on this ideal situation from a model standpoint, we can actually go into where you are actually. This is stocks, bonds, cash, money markets, alternatives. So you get a feel for whether or not you're in line. In this case, my friend George has a higher allocation than perhaps his risk profile. Well, that might not be a bad thing if that's what we want from the portfolio or what George wants from the portfolio, even though that might be different. However, generally speaking, what you find is the target stock bond ratio should be the same or very similar to the allocation down in here. So with that in mind, we will continue on. The other thing to look at this page are the accounts. And you'll notice the accounts have name, registration, what the custodian is, where they're housed, partial account number to help identify them. And then we get into what the strategy is on the account. And these may be code for us, but it also gives you a sense for what the code or the management strategy is. And you'll also see in your report a model and then the account value. So that's essentially what this first summary page is all about. Moving on to the next page, you'll see a quick summary for those of you who want the bottom line. This is how did I do? This tells you specifically where you started at the beginning of the period, where you ended up, and gives you a time-rated return. And let me just blow this up for you so you can see a little bit more detail what you're looking at here. That might help. So when you get into the actual returns themselves, you can see the ins and outs, the projected income, and then the weight of return. When you roll down this particular page, you'll also see what we call a mountain chart, which says this gold line is where you started. So that's how much you put into the account. This is the market impact, and over time you can see this thing starts to creep up. Now, this is a very short period of time. Over longer stretches of time, quarters, years, as they go by, you'll start to see this mountain chart begin to outperform. If you scroll down a little bit more, you'll also see that we've put in here another chart to take a look at from a performance standpoint, showing you specifically, instead of a dollar amount, we're looking at percentages. So you can see how my rate of return was on a percentage basis over the same time period. Rolling on to the next page, you'll see the specific portfolio composition of stocks to bonds. So here you can see what we're favoring. Specifically in this George's case, we're favoring large cap core. This isn't exactly what we're doing for you or what we're doing to represent the market outlook at this point, but it just gives you a sense for what the portfolio is made up of. Next page down now gets into more of the detail of what kind of benchmark we're comparing ourselves against. And in fact, what we do here is we give ourselves a number of benchmarks. Quickly speaking, this is a continuum. You can almost see it here from left to right. Low risk, low return, high risk, high return. We're trying to find the right place, the optimum mix, stocks, bonds, cash, and alternatives to basically give you the best risk-return profile. Now I'm saying a lot here, but this is essentially how we do it. Each asset class that you have in a portfolio can be plotted. And if it's plotted, then you'll know what the historical performance has been and the risk that you take to get there. And then you take your portfolio, in this case the green portfolio right here is where George is. So as a result, we have an opportunity to tell George that you're looking pretty good in terms of your risk profile. Next page. These are more benchmarks to look at. Then we have the accounts themselves. So now you get an idea for specifically what the accounts are. So you can look at what you own. So this is your account here. And this shows you the ticker, the price, and it gives you an idea for the time-weighted return of this particular holding. In other words, if you look at, pick the first one on here, this Latin America fund right here in George's portfolio, then now you have an opportunity to see, well, that particular fund I'm up 26.26% on since we've made the investment. So you get a sense for the detail of the activity in these funds. And you'll see one of these for each portfolio, each account that you have, and again it'll total down here at the bottom to get, it'll tie into the performance numbers on the top. So that's our snapshot report. If you have any questions, please feel free to get back to me anytime. Anyone on our staff can help you. Any feedback would be well appreciated, and I hope you enjoyed it. Thanks. We'll talk to you soon.